But Harsh is also standing by with what a whole bunch of brokerages have to say and what the commentary of Axis was like. Harsh, take it away. It's been tough. It's been tougher than what the street was expecting for Axis.
Well, clearly, we had highlighted two key aspects of Axis's results which were to be in focus. First off, on the NIMS front, well, the NIM shrink is not as large as possibly anticipated, but that's because of a one-off. In fact, when you're looking at the shrink, excluding the one-off, it's below the 4% mark. So margins below 4% expected to taper towards 3.8. They're going to try and control that taper is what the commentary seems to be suggesting. But the largest issue is with regard to the credit costs. Elevated credit costs, 55% of the increase in credit costs from that 0.5% to 0.97%, 55% of that is because of lack of recoveries in the corporate space. They're expecting that to unwind in coming quarters. You'll have to wait and watch out as to how much that unwinds. The second piece is with regard to unsecured. Out of the around 4,700 odd crore of slippages, 4,200 coming from retail, and that's the other concern. What they seem to be suggesting is that this is simply a normalization happening, and once recoveries start to offset some of these slippages, largely you'll start to see a taper and normalization. Therefore, they are not too concerned from a management commentary perspective, not too concerned. They are not, or they are suggesting that this is not suggestive of FY25 credit costs. So these are the two key aspects on the negative side. The third aspect possibly is the loan to deposit ratio. Deposit growth not coming through, 0% deposit growth. Lots of competition is what they are indicating, as a result of which deposit growth has been muted. They're not going to compete, unlike in the past, they're not going to compete on rates. So they're not going to hike deposit rates. They're going to protect margins. That's going to be the strategy going forward, and that they've absolutely clearly highlighted. They've said they will not increase rates. They'll protect margins, and that will get continued in the next cycle. That they believe will be a longer term strategy for Axis Bank. Last off, on the positive side, well, OPEX seems to be starting to taper. 27% is what the OPEX growth was in FY24. That is currently negative on a sequential basis, negative 2%, but that will taper in FY25. So that's one positive. So credit cost increase likely to be offset by that taper in OPEX. But ROAs have shrunk sharply, 15 bips of ROA shrink on a year-on-year basis, 19 bips on a sequential basis, sharp ROA shrink.
Harsh, it's not looking good, and I think markets are in no mood of being kind today, at least. It's going to be a weak beginning for Axis Bank.